Alright everybody, in this flow review, we're going to cover some well-timed options flow that hit the tape during the market-wide pullback earlier this week. We'll also take a quick look at a longer hold trade that was tracked by Snorlax from the Unusual Whales team. I'm going to navigate to my contract lookup page, and here we can see the two trades we'll be looking at today. The HOOD $48 call expiring on February 21st. And then we'll also look at the HOOD $40 call expiring in May of this year. Now starting us off here, the HOOD $48 call expiring on February 21st. We're going to go back in time by just one day here to see the initial fill that we'll be talking about right here at 1:37 p.m. Central Time on Tuesday, January 14th. Pop that bad boy open, and here we are where we first saw these fills coming in. All at the same timestamp, right here at that 1:37 p.m. Central, with a bid-ask spread of 258 to 260, we see all of these fills happening right at the ask price. So that gives us the inclination, but again, not the guarantee, that these contracts were bought. Additionally, the total volume definitely supersedes the open interest of under 1,500 contracts. Now, since there is that 1469 open interest, it's possible some of these transactions were closed. But based on how these orders filled, all at the same timestamp, all at the same price, and the total volume superseding that open interest, signs point to this being a new bought to open position. Now, at the time of these fills, HOOD was trading at $43.26 per share, placing these contracts 11% out of the money. Throughout the remainder of the afternoon, this trader experienced a bit of drawdown on the position as the market continued to pull back into close on the 14th. Now, on the Unusual Whales charting tool, we can see exactly that. Right up here is where our trader entered those contracts at $43.26 per share. And way down here, $1.60 lower, was the low of day on the 14th. So naturally, this contract took a bit of a tumble along with it. So going into close on the 14th, this contract had dropped 27% to $1.89 per contract. Now back to our chart here, we can see that the overnight hold was great for this trader. Before I even scroll up, this massive gap right here reflects the movement that HOOD experienced going into the 15th. So scrolling on up here, yes sir, HOOD gave a nice ripper to the upside. At the time of recording, the high of day was $46.23 per share. So these contracts that were once 11% out of the money are now less than 4% out of the money. Now, naturally, that gave us a big old boost in the value of this contract. So back here to the contract summary, we can see that these contracts on the 15th reached a high of $380 per contract. From their entry of that $260 per contract, this profitability put them at about 46% gain to $210,600. Not too shabby for just an overnight hold. Now on this contract today, bring this back to one day view, we can see a transaction of about 350 contracts. These filled at the mid, that's why this is blue here. And then followed by that, we had a similarly sized ask side transaction. Now hypothetically, this volume could be part of this open interest. We won't know for sure until tomorrow when we get to see that open interest update. But as it stands, it seems kind of likely that most or all of this position is still open. Now that 210K gainer is pretty good for an overnight trade, but we're not done here, folks. Like I said, we have one more contract to look at, the HOOD $40 call expiring on May 16th. Now, as I mentioned, Snorlax from the Unusual Whales team has been tracking this contract for about a month, but we can see that we had some substantial action back in November before the large orders that we saw on December 20th for this $40 call. So we're first going to go take a trip down memory lane and look at this transaction from November 26th. Now here we can see once again Fills at the ask price within that bid-ask spread across several orders totaling up to over 4,000 volume on the day. Compared to only 2,907 open interest, we can be fairly certain that some of these are new positions. It's not guaranteed that all of them are, but the tape is hinting at us that this is indeed a new position that was bought to open. Looking at the contract summary for way back on the 26th, we can see that 4,200 contracts transacted that day, with 3,500-ish carrying over into open interest. So we're going to use that 3,500 for the sake of simplicity here. Now we can see in this historical flow that the contract was largely quiet across the volume spectrum. Bid side transactions here, some ask side transactions there. Nothing really happened though until December 20th. Here we had 8,700 contracts transact, largely at the ask, and 8,400 of that carried over into open interest. What we're going to be looking at here on this December 20th bar is the initial 6,700 contracts that transacted here at $670 per contract. From that point, the contract didn't really experience any drawdown. It looks like it hit its final low on December 31st, where it hit a low of $538 per contract. But that wasn't really that big of a deal for this trader, because we can see from that point onward, we see nothing but upward price movement in the contract's value. Now today, on the 15th, Hood caught some serious bids. We see an over 10% gain off the market open to hit that high of $46.23 per share. As I mentioned, with the $48 call we already looked at, the value of this $40 call rocketed once again. So let's head on back to our contract lookup and take a look at the results here. This upside move put this $40 call over 15% in the money. Now, naturally, the contract value reflected that ripper, reaching a new high of $10.70 per contract. Now, if you recall, that initial fill back in November came in at an average of $552 per contract. Taking that up to today's high of $10.70 per contract, this trader's looking at a 94% gain. Putting into perspective from their entry, that means this first entry from November hit a max profit of $1,813,000. Now, if we look back to our December 20th fills, basing again on that initial 6,700 contracts we saw, these transacted at an average of $664 per contract, which, right again, back to our high of $10.70, that places this leg of the trade up 61%, which for the December 20th position, that's a max profit of $2.7 million. Now, there's no way to know for sure whether or not these two transactions are the same trader. But if they are, at the time of recording this video, this trader was up an astounding profit of over $4.5 million. And if we come on down back here to the historical volume open interest profile, we can see that today on the 15th, no transactions have occurred whatsoever compared to that nearly 15,000 contract open interest. That means that this position on the $40 call is still open. I hope this video kind of helps you guys figure out how we track flow from that point of entry, along with positional adds, and noticing that we're not seeing any exits in the volume relative to the open interest. We'll be back next week with another flow review video. In the meantime, check out the education playlist as well as the Unusual Whales Info Hub with myriad information, breakdowns, site guides, and flow reviews for you to learn how to use this platform effectively. Take care, everybody.